As it's prone to do, the market started a week on a Monday with a really, really quiet day. There wasn't very much upside or downside. We didn't get any new highs or new lows on a 4-week basis. We didn't close above yesterday's high. We did get a higher high, intraday high and low. So there was some, still bullishness, enough bullishness, but again, not enough to say, that because we've been talking about this kind of weak bullish bounce that we've been getting on a near-term basis and how it's not necessarily the most bullish to help maintain what has been a pretty mature intermediate trend. So we're going to break down kind of what we're seeing today and how that either adds to this idea that, this near term, we might end up with a bearish near term peak, or, are we going to like break out here and really kind of get going and move to the upside. So I'm going to break all that down, talk about what's driving the dollar. Made an interesting move today. We'll look at that and see what that means for the market and what impact it had on the markets. Technology sector was an underperformer. We'll talk about why. We'll break down its performance, what that means for the market. Some other sectors grabbed the baton that we want to, and there was a little bit more breadth. It didn't necessarily show up in the breadth indicators, but there was better breadth today than what we normally see. So I'll show you that. And then our trade ideas, a stock that, is a really high beta stock, but has not been behaving like one. So we'll talk about how to trade that with its recent moves that it's been making. So let's go ahead and get started. Today is Monday, August the 11th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. All right, let's go ahead and get started and take a look at the S&P 500 with the market forecast indicators. You can see the near-term line continued higher, but still not in the reversal zone, still just slightly below it. The intermediate line also kind of staying slightly below it. Going up again today, but just barely. The momentum line dropping all the way down to oversold levels. So again, technically this is a bullish intermediate confirmation signal according to definition, right? You got a bullish posture, you got dark green shading, and you have an oversold momentum line. That's essentially what gives you your bullish intermediate confirmation signals. It's not as strong because the intermediate line is not above 80. That would be the ideal scenario, and that's not the case. But again, it's hard for it to get above 80 when the near-term line can't get above 80 and produce a nice little near-term run. Now, we've been bullish for a while. We've been kind of gradually going up and down, up and down, up and down. So that would mean tomorrow should be an up day. Right? We've been getting higher highs and higher lows too, especially considering we have an oversold momentum line. The last 2 times that we've had an oversold momentum line, we've bounced and bounced again. Here too, it just took a day, and over here we bounced for a few days, and then on this one again it took a day, but we bounced there as well. So when the momentum line has been oversold, but not extremely oversold, which we haven't had this entire bullish rally, we haven't had an extremely oversold momentum line. When we start to get that, that's when like the run may be over with, right? That's usually one of the signs is when your momentum line is extremely oversold, and the near-term line also, you can see has only had a couple of instances here where we've been in oversold levels, but not too strongly oversold. And then again, when it gets down here too, that's generally a sign that we're going to be an intermediate decline, or at least really close to an intermediate decline, like we saw over here. So again, it's not the most bullish chart market forecast, but it's also not necessarily breaking down either. It's still set up for a bearish near-term peak, so it's still something we need to kind of watch out for. But again, you assume that tomorrow we'll probably end up filling in the rest of this, or at least get up to closer to the highs if we follow the same pattern, right? The up and down pattern, and then the bounces off the oversold levels when it comes to the momentum line. The NASDAQ 100 was down 1/3%. It's again same pattern. The difference here is the intermediate line is in the reversal zone, so it is above 80. So this is a bullish intermediate confirmation signal that again you would expect that we would bounce. Again, all the other instances, last 3 instances, we bounced here, and we bounced here. So every one of these last 3 we have bounced off of. And so until precedent breaks, we want to follow that precedent there. The intermediate line is really close to getting back above the market sentiment line. And remember, we did get a new high today after getting a new closing high last Friday. So the NASDAQ is looking pretty good there. Your Dow Jones Industrial Average, the intermediate line now is not bullish. We got another bull tag today, so light pink shading and the yellow line again after getting dark green shading yesterday. So back to another bull tag, and again, we're not really bouncing. Like bull tags, you need to bounce off of this, or it turns in like it did over here. It turns into an intermediate decline. So the fact that we continue to get them and we're not bouncing is a little bit of a concern when it comes to, again, oversold momentum line. But this is not a bullish intermediate confirmation signal because we don't have the dark green shading anymore. It's back to light pink, hence the tag. And your near-term line was slightly in bearish territory yesterday, and it is even more slightly after a little bit of a jump in bearish territory today. Your market sentiment line is close to crossing out of the upper reversal zone. Your Russell 2000 is not as bad, but it also did get a bull tag because it went back to light pink shading. The intermediate line turned back down again. The near-term line, remember, being below the near intermediate line when it's between the reversal zones. If the near-term line is below it, then that's obviously bearish. Now it's not dropping oversold levels. The momentum line is not dropping the oversold levels or extremely oversold. And this one can, because the Russell is a higher beta index, so it can do that. But you notice, and the near-term line can get into the reversal zone, but it's when it gets really strongly bearish that's the concern, and we don't really have that necessarily yet for the Russell 2000. All right, well, that does it for our market outlook preview video. Of course, you can get the full version of the video, about a half an hour long, at marketscholars.com. Our foundation, all of our subscribers get access to that, starting with our foundation tier. The link to the market outlook blog post with the full video, as well as the link to join our foundation tier. Just $29 a month gets you access to every market outlook video for the month, including the trade idea we do every day, including the market outlook live stream we do every day separate from this, where we review all those trades, manage them, see what we've closed one out today that we had done previously. Also includes the Market Outlook Live Trade Tracker, where we keep track of the results of all these trades throughout the year. So you get access to that. Again, $29 a month, or if you do the yearly version, you get 2 months for free down there at $2.99 a month. So again, thank you very much for watching. Really appreciate it. Make sure you subscribe to our YouTube channel, hit that thumbs up icon, comment on the video down below, share the video with anybody else who'd be interested. Follow me on Twitter and Facebook, LinkedIn, like our content on there. And then have a great rest of your Monday night. Thank you for watching, and we'll see you all tomorrow.